Hey traders, welcome to Quantsapp. My name is Varun, and build-up is a concept that not a lot of traders are aware of. Okay, some traders use it on a daily basis or on a regular basis, but still I have seen a lot of retail traders rely on technical analysis instead of build-up. So I'm not saying technical analysis is replaced by build-up, but build-up is a very good secondary indicator. So if you are using technical analysis, which I'm pretty sure that you are, chart patterns and technicals is something that traders have been using for years now, and pretty sure they will keep on using it till the end of time, which is it because it works, it's simple, it's a good way of understanding where the market is going to go. But still, technical analysis produces a lot of false trades, because inherently we are trying to trade direction, and options is not as non-linear. Okay, so options is really non-linear and dynamic. So options is not as linear as maybe futures is, or maybe it's the cash market. So what we'll be learning today, we'll be learning the concept of build-up. Okay, we'll be learning the implications of build-up and the uses of build-up as well. So build-up was something that I initially learned, right? So it was one of my first topics that I learned when I got into derivative research, and it is something that I have been using for years now. Okay, so I still use it because I still feel like there is no other indicator that can replace build-up, because build-up can show you direct participation when it comes to futures. Okay, so you can clearly see that where the participation lies, where actually future trades are happening. So where the buyers are actually buying the futures, where sellers are selling futures, where profit booking is happening, whether a fall is temporary or is it permanent. So we do not know. So that is something that build-up can give an idea of, and you can actually pair it with a lot of other technical setups or any other setup that you have, fundamentals or something, to actually build conviction on top of your trade. Okay, so without wasting any more time, I'm sure I have wasted a lot of times, but let's start. Okay, what to do? Okay. So moving on. Now, what we were talking about, I'll just share the screen of. I'll just share the whiteboard first. So I would like to, not Quantsapp, I'll share the whiteboard first, because I would like to explain what exactly the concept is, how it came to be, and why you should keep on looking at it. Okay. So build-up. So there are two things normally. One is script-wise build-up and one is sector-wise build-up. So first we will cover in this video, we'll cover script-wise build-up, and maybe in an upcoming video, we'll cover sectors as well. Again, so first of all, I would like to thank everyone for the support as well. I know I missed that out. The support has been immense on these English specific videos. So a lot of traders were already requesting for these videos. So I started to do these. So thank you so much. I appreciate the support that you guys have already given me. Okay. So let us start. What do you mean by build up? So the word build up means the actual positions that have accumulated. Okay, so the positions that have accumulated. So it's basically, it comes from open interest data. So we'll understand what exactly open interest is, how we can use it to track participation when it comes to futures. So now we will only look at futures. We won't be looking at options, because build-up is generally a futures-based concept. Okay, it's not generally used in options. It can be used, but there is a different video for that. Okay, so futures build-up is something that we'll be covering. Now, open interest as well. What do you mean by open interest? So open interest, for people who do not know, open interest is nothing but number of open contracts. Okay, so you can think of it as this way. How many traders are actually engaged in a trade? That is something that you can see based on open interest. Let's say if there is 100 OI, it would mean that there is 100 buyers plus 100 sellers. Okay, so one open interest equals one buyer and one seller. 100 open interest means 100 buyers and 100 sellers. So you can actually keep track of participation on what is going on in the particular market itself. Okay. Now, how do you view it? Let's say if I'm looking at futures, okay, let's say if I just give an example, let's say Nifty's price is at 20,000, just an example. Okay, 20,000 is the current market price or CMP. Okay, 20,000 is the current market price. What does it further mean? Okay, what does it further mean? Now, this means that open interest will have to accumulate here. Okay, so let's say open interest, I'll add 100 contracts. Okay, now there is 100 contracts, which means there is 100 buyers plus 100 sellers. 100 buyers and 100 sellers. 20,000 is the current market price. 100 is the open interest addition by 100 contracts, and there's 100 buyers and 100 sellers. Where should the market go now? Right. So according to open interest data, buyers quantity and sellers quantity is equal. So should the market go sideways? Should the market go up? Should the market go down? Who knows? So no one is going to know where the market is about to move. No one knows, because there's buyers quantity and sellers quantity, which is equal. Now, based on this, what I would say, look at where the price is moving, because we need to understand who has initiated the contracts. Okay, so there might be some buyers who have initiated contracts. There might be some sellers who have initiated contracts. So I normally teach people to wait and watch. Okay, so let's say after this price moves to 20,100. Now I can say that buyers have initiated the contract. So since OI increased, and along with that, since price also increased, I can say that there was fresh buying in the market. As simple as that. So wait for the open interest to build up and then check whether the price is moving or not. If the price is actually moving up, that means there's fresh buying. If the price is going down, then means there is fresh selling. Now, what about unwinding? So it cannot always happen that open interest keeps on adding, right? It's not like volume. Volume keeps on adding, but open interest does not just keep on adding. So what do you mean by unwinding? So unwinding is quite simple. Unwinding means the points where open interest is decreasing, or where traders are squaring off their trades. If traders are squaring off their trades, that means open interest keeps on decreasing. Right? So in that case, you can think of those as profit booking or loss booking points, right? That could also happen. So there are separate terms for the unwinding points as well. So I'll explain each of those as we go on. Okay, so let me just erase everything on the whiteboard. We'll start fresh. Let's look at the built-up conditions. There are 4 built-up conditions. So let's say first condition, we already knew that price increases, and along with that, if open interest increases, that means that there is fresh buying. Okay, fresh buying. So if price increases, future price. If future price increases and futures open interest increases, this is a clear indication that there is fresh buying in the market. Okay. Let's say if open interest is increasing and price is decreasing. So we'll just leave some space. Okay, price is decreasing, but OI is increasing. What does that signify? This signifies fresh selling. Right? Now, profit booking points. Profit booking or loss booking points. Let's say if the price is increasing, okay, but OI is decreasing. So I type negative OI. Now, this would mean that there is no fresh participation, right? So, no fresh participation. The existing contracts which have already been accumulated are actually dispersing or evaporating, right? So, this indicates square off. So, since price has increased, now I will say the existing sellers have actually squared off their trade. So, if I'm an existing seller, if I want to square off, I'll just go and buy. So that will square off my position. So this would now mean sellers square off. So I'll just type sellers square off. Okay. Or sellers are profit booking or sellers are loss booking. So in general, sellers square off or sellers exit. You can think of it as an easier term. So sellers exit. Now similarly, the reverse of this, if price is decreasing, and again if OI is also decreasing along with it, what would that mean? That would mean buyers exit. Since OI is decreasing, that means no fresh participation. Existing contracts are, there's some activity in those existing contracts. Since price is decreasing, I would say the existing buyers are squaring off. So they are selling. So they are actually exiting their positions. So this is the simplest thing that I can explain. So there are some technical terms here, which I will explain in a second. So there is fresh buying is known as long or long built up. Fresh buying is long built up. Then fresh selling is short built up. Okay, short built up. Then we have sellers exit, which is short covering. And then we have buyers exit, which is long unwinding. Okay, I'm pretty sure a lot of traders already know this, but still it's nice to know, right? So this is what we have. Now we need to understand cycles. So this is generally used for a longer term view. So not intraday, but a slightly positional view, maybe for the next 3 days, maybe for the next week, 15 days or a month. That is how we generally analyze built up. So it's used positionally. So I'll explain how built up actually affects a stock's price. Okay, let me just clear all of these things, clear this page. So whenever a stock is moving up, it will first move up. Okay, then it will fall down. Okay, then again it will move up. Then again it will slightly fall down. Then again it will move up, and so on and so forth. So whenever a stock is moving up, it will never move up in a straight line. You can clearly see that whenever a stock is moving up, it will never move like this. It will always move in a zigzag pattern. So it will go up, then it will slightly experience a downward trend, then it will go up, then again it will fall slightly, then again it will go up. So there are temporary falls continuously in a bullish trend, right? So what causes this? This is caused by simple build-up. Okay, so how do I explain this? So let me try and explain. So some traders first bought at this point. Okay, some traders bought here. Okay, then they actually got to ride the trend. Then at this point they thought this is enough for us. What I will do? I will go and book my profits. So these buyers have squared off here. This caused the future price to fall down. So future price came here. Now at this point, some traders thought that it would be nice to buy at the dip. So some traders bought here, which caused the market to go up, right? Then again, some traders booked their profits here. Then some traders bought here, and so on and so forth. So it's a cycle that you can actually see. So here, first we say that this is a long build-up. Okay. Then here we will call this as long unwinding. I'll actually write it down. So this will be known as LU, long unwinding. Then this is known as long again. Then this will be known as long unwinding, LU, and so on and so forth. So whenever market is going up, it will always follow a long and long unwinding cycle. So first it will go up, then slight dip, then again buying opportunity at the dip, so which will pull the market again. Then again a slight dip, again buy on dip, and so on and so forth. So market keeps on experiencing this bullish trend. So long and long unwinding is the ideal cycle for a bullish trend. Similarly, there is short and short covering as well. If I just reverse this, then you can see. Okay, so first price will fall down. Some people will sell, price will fall down. Okay, after that, some people will book their profits. price will slightly move up. Then again, some people will sell at the high. Again, price will fall down. Some people will book their profits and so on and so forth. So that is how generally short and short covering works. So this is short. Then this is short covering. SC. This again, I will say this is short. This again is short covering and continue. So short and short covering is a bearish trend. So these are what we call healthy cycles because we want the previous traders to square off, exit their position or book their profits, and then this will encourage the new traders to participate in that particular trend. So if there is no short covering, then there will be no new traders because new traders always want to sell at high, right? If there is no long unwinding, then there will be no buyers because new buyers always want to buy on dips. So that is the general idea. This is how we actually identify a cycle. This is how we identify a healthy cycle. Now, how to actually see whether the built-up is actually following a trend or not. So it is quite simple. You can just go to Quantsapp for that. So I'll just share the screen of Quantsapp now. So I have explained the concept. Now I'm sure that you guys understand the concept. But where do you look at this data? How to actually see this data? How to actually understand what is going on in terms of build-up? Quite simple. Go to the search option inside Quantsapp. So this is web.quantsapp.com. You can access it via the web app if you're on desktop, or if you're on Android or iOS, we have an application on the App Store as well. Okay. Now moving on. Okay, just search for built-up or you will find it right here, built-up Scrip symbol. So if you just search for Scrip, you will find built-up Scrip. So there are three things: built-up Scrip symbol, Scrip OI historical, and Scrip cycle. So I'll just open built-up Scrip symbol because all of these are the same. So once I open Scrip symbol, you can see this is the current build-up. So you can clearly see this refreshes during the live market. This is live data. Okay. You can select what expiry you want. So it can be a weekly expiry or a monthly expiry, right? You can see all of the build-ups. So if I just want to see long build-ups, then it will only show me long build-ups. If I just want to see long unwinding, then it will just show me long unwinding. If I want to see short, it will show me shorts, right? And short covering and so on and so forth. Okay. Now, you can also identify sectors. So this can work as a sector-wise heat map as well. So let's say if I just want to check the PSU banks. So PSU banks, these are the particular stocks, right? These are the built-up types. You can see the exact price percentage that, if the price has moved up or price has moved down by what quantum. And you can see the change in open interest as well. The absolute percentage of increase or decrease in open interest. So this is future data. You can see the absolute open interest, the actual future price, and the name of the symbol. Right? So this is a very self-explanatory page. I don't have to explain a lot of things. But one thing that I will explain is the breadth. So up at the top, let me just annotate if I can. Okay. Up at the top, where is the drawing option? Yes, right here. You can see that it is showing me out of the entire F&O basket. So the entire F&O basket has 187 scripts, including the indices. So out of the entire F&O scripts, out of the entire F&O basket, how many stocks are following a long build-up, or how many scripts are following long build-up, long unwinding, short and short covering, is something you can see here. Right? So long unwinding, short covering, you can clearly see it right here itself. All right. Okay. Right. So this is known as market breadth, right? So you can actually see what the actual sentiment of the market is. So today's the market sentiment was actually bearish. That is why Nifty's price has slightly fallen, and majority of the stocks are following a short build-up inside the entire F&O basket, right? So you can clearly see if I just sort based on price, so you can see majority of the stocks are following a short build-up. Majority of the stocks were bearish today, right? Not a lot of stocks went up, but a lot of stocks actually have fallen down. Right? There is also a future OI tab, so you can just move to the third tab. Okay, so if you want to look at the historical build-up data, then you can go to the future OI data. So I'll just click on it, future OI. So Nifty is added. You just select any particular script you want and you can choose a date, whatever you want. From date, it's basically that if I want to see data for the past 3 months or so, then I can just add that. You can see the entire data. Okay. So there are green bars, there are red bars, there are blue bars, there are yellow bars. Okay. So green is indicated by long, the blue is indicated by long unwinding, around short is red and short covering is yellow. So these are the 4 colors that we have designated for each build-up type. Okay. And you can actually see the bars. Okay. So the black line here on this graph is futures price. So Nifty's future price on each day. You can see the date on each day. Okay. The bars signify absolute open interest on that day. So wherever there is long unwinding, wherever there is blue bar or yellow bar, you can see the bar is smaller than the previous bar. So that is absolute open interest quantum. So for example, here there was good open interest, then open interest decreased. So that showed a short covering, right? So price actually increased, but open interest decreased. So this was short covering. Here you can see price decreased and OI also decreased, so long unwinding, right? When it comes to build-up, if there is red color or green color, you'll always see that the bar is bigger than the previous bar. So you can see under long, the bar's height is increasing. So it's very simple. You can also check the absolute open interest here. So absolute change in open interest, you can see, and absolute change percentage. So this is actual change in open interest that you can keep track of. So I normally use this. So you can also use this. So currently, if I just look at the current data of Nifty. So let's say I take the data from the past maybe 1 month, right? So it's June 19th. Let's take the data from May 19th, not too far off. Right? May 19th, it was a Sunday, so I'll add 20th May. Okay, so this is the data for the last month, okay, from the past month. I can see that majorly there is green and blue color, right? If I just select open interest, green and blue color is more dominant. What does that mean? That means that Nifty is following a long and long unwinding cycle. So since Nifty is following a long and long unwinding cycle, you can see that Nifty has actually moved up. It is continuously creating life highs. So it is at its all-time high. This fall was actually due to elections. So we can ignore that. But if you just ignore that, clearly you can see that market has moved up. So this is the long and long unwinding cycle. So this is how you can analyze future OI build-up. But the most important part is, how do you know which stock is following a particular cycle? Because this is something that I always have difficulty with. I cannot manually check the entire F&O basket with the help of future OI. So it will consume a lot of time. I can do it, but it will consume a lot of my time. So I don't have that much time. So I will change it, or I will use a particular scanner. So that is where cycle comes in. So you can just click on cycle, right? Just click on cycle. Now this acts as a scanner. So it's similar to future OI. It just does not show you the absolute quantum. Okay. So here you can search all of these stocks manually. But what I like to do is I like to select the look back period. So look back period, I'll set it as default. So default is 20 days look back period. So last 20 trading sessions. Okay. For reading, I'll set it as long and long unwinding or short and short covering. If you just scroll here, you'll find L-LU or S-SU. So I'll select long and long unwinding. Then you can see there's count. So count will be 14. Why 14? Because I want out of the last 20 trading sessions, at least 14 trading sessions should have long and long unwinding cycle. So out of the last 20 trading sessions, at least 14 days, the stock should experience long and long unwinding cycle. Okay, you can add similar sectors as well. I'll keep it as all and I'll just click on apply. So once I click on apply, you can see these are all the stocks that have majorly green and blue. These are all the stocks that have majorly green and blue, right? Greens and blues. Simple as that. So ABFRL, I can go for a trade. So wherever there is short as of now, I will not enter a trade there. But I could enter a trade in Biocon. I could enter a trade in Chambal Fertilizer. Coromandel is another good trade. Idea is another good trade. Infosys, RBL Bank, these are the stocks that I can pick. So I can do some technical analysis or some fundamental analysis, whatever I like, I can do that. And then I can enter a trade. At least I know that these stocks are following an actual long unwinding cycle. So this is a trend which is being followed. Similarly, you can just go to short and short covering as well. You can apply that short and short covering. See, these are the stocks that are following a short and short covering trend. So generally what I like to use whenever there is a long unwinding, okay, just an example. If there is long unwinding, I will check the stocks which are currently experiencing long unwinding. Okay. So if a stock is currently experiencing long unwinding, let's say Hindustan Petroleum. So Hindustan Petroleum had recent long unwinding and just one short recently. There is a good chance that Hindustan Petroleum could be creating a bottom. So whenever there is a next long build-up, I can enter a trade there. So just I'll explain. I'll go to future OI build-up or the future OI tab and I'll select Hindustan Petroleum. Okay. So I can clearly see that this was the election fall, 4th of June. This was the fall due to election. After that, it has continuously gone up. Now, yesterday there was some profit booking. Okay, yesterday there was some profit booking. If I look at OI percentage, there was some profit booking. Now there has been some short. Okay, there has been some short. As soon as I see one long build up here, I will go and enter that trade. Or I can go and enter with a bullish option strategy. Why? Because Hindustan Petroleum could create a bottom here. Same thing you can actually see here if I open the cycle again, long and long. Right? Let's see if I can spot some past examples. Let us see. Okay, let's just take maybe 4th June, everyone was long unwinding. Any other stock which was experiencing like that? Maybe idea, not idea. Okay, let's look at Coromandel for example. Coromandel would be a good example for you guys. Okay, so there was long and unwinding, right? Clearly you can see that there is long and unwinding. If I look at open interest, long and unwinding, there was a few bottoms that was created, right? You can see here there was long unwinding. After that, next long and market went up. So ignore this fall. This fall was due to election, so you can ignore that. But still, even if you consider that fall, that also created a bottom due to long unwinding. And after that, it has moved up. So profit booking points are something that you can keep a track of, right? Similar thing, if I want to look at short and short covering. So SNSC, short and short covering. I'll just keep track of this. 14, apply. Maybe a stock which has experienced short covering and after that fallen down. Okay, so let's look at Ashok Leyland. Okay, I'll just add Ashok Leyland here. This is Ashok Leyland. So I can clearly see short and short covering. So Ashok Leyland created a bottom here due to election. After that, it came up. But I know that it has actually moved up due to short covering. So I know that it might be creating a top and based on a possible supply zone, it could fall down. So this is where it created a top. Here I saw that there was short. So on the next day, I could have gone and shorted it, right? So I could have entered a bearish trade on Ashok Leyland and you can see that it has fallen down, right? So here this would be my price. So 237 would be my price of actually executing a trade. Okay, and here you can see 234 is the current price. So it could still further fall down, Ashok Leyland, because it is still following a short and short covering cycle. But you get the point. So the trend will never lie. Trend is for the majority of the times sustainable. And based on participation, you can keep track of this. Right. So as of now, I would say since Nifty is at a bullish trend, I can clearly see with the help of future Y. If I just add Nifty here. Since I can see that Nifty is following a long and unwinding cycle, you should also look at stocks that are following a long and unwinding cycle instead of trading the opposite way. But even if you want some stocks on the bearish side, I would say you can go to cycle, check which stocks are following a proper cycle. So 20 and 14 cycle, you need to follow this. And after that, you can actually enter that trade. Sorry, short and short covering, and apply this. You can see. So today, when the market has fallen down, these are all the stocks that have experienced a really good fall, right? So Asian Paint, yesterday there was short covering. Today you could have entered the trade, right? Then we can look at HDFC Life, yesterday short covering. Today you could have entered a trade. Tata Consumer, yesterday short covering. Today you could have entered a trade. So you can actually, go for bottom fishing, or you can actually, go and look for where market is creating a top, or where a particular stock is trying to create a top. So you can actually identify those supply and demand zones quite easily as well. Right? So that is the concept of built up. I'll just recap once. So built up is nothing but trend verification method. It is used based on future price and futures open interest. And inside Quantsapp, we have a tool that will help you filter stocks. Okay. How do you filter stocks? You select a look back period of 20 days, right? You set the reading as long and winding, or short and short covering. You set the count to 14. Okay. Then you can just click apply. Why exactly 20 and 14? Because 20 trading sessions would classify as a month. Okay, so last 1 month's data we are considering. And out of those 20 trading sessions, at least 70% of the times, if a cycle is being followed, there is a very good chance that the stock could further follow that particular trend. Okay, for verifying that trend and actually checking the absolute quantum of open interest, you could go to future OI, you could check the OI change percentage, and you could identify what is going on. Right? So that is how you actually analyze this thing. That is it for me. Thank you so much for watching. Thank you so much for your support. All the best on your trading journey. My name is Varun again. I will see you guys in the next video. I'm not sure when it will be, but in the next video soon. All right. Thank you so much. Thank you so much for your support on these language specific videos. And again, I cannot thank you guys enough. Okay. Thank you guys.